Hello, everyone. I'm Yoko. I've noticed that a lot of information happening in China is not accurately conveyed to countries outside of China. Therefore, I've been gathering information and sharing it in English on this channel. Since I obtain information from multiple sources, I'd be delighted to hear your opinions in the comments regarding the content of the videos. I'd like to emphasize how crucial it is to maintain stock prices in China today. This isn't unique to China but is a common practice in the business world. When companies need to borrow money, they often have to provide collateral. And one common practice is using their own stocks as collateral. For instance, let's say you have stocks worth 1 million yen in the market. You can use these stocks as collateral to borrow 800,000 yen. If the borrower can't repay, the lender can sell the stocks held as collateral and recover the 800,000 yen, leaving the remaining debt to the borrower. However, the problem arises when the stock price starts to fall. If, for example, the stock price drops to 700,000 yen, the lender won't recover the full amount even after selling the collateral. So, in such cases, there are two general options. One option is to ask for additional collateral. Since the existing collateral is no longer sufficient, the lender requests more assets as security. However, in deteriorating economic conditions, it may not be possible to provide additional collateral, as you may not have enough assets to offer. In such cases, the lender faces the risk of not being able to recover the money and may start selling the held stocks before incurring further losses, collecting the borrowed funds and passing any surplus to the debtor. This cycle can lead to a negative spiral. As stock prices continue to decline, the collection of funds may not keep up, and by the time stocks are sold, it's possible that the lender has already incurred losses. China's Communist Party is well aware of these issues and has implemented measures to maintain stock prices. As previously mentioned in this channel, they have introduced tax reductions on stock trading and imposed restrictions on stock sales for major shareholders. However, when a company's performance deteriorates, or when the overall Chinese economy faces a downturn, the expectation is that stock prices will fall even further. As a result, the selling of stocks continues unabated. So, China's stock prices have been consistently poor. This also applies to bank stocks. Let's take a look at the stock price of one of China's four major banks, which is considered highly reputable. Here's a one-year chart of China Bank. Earlier this year, the stock price briefly rose but has been steadily declining since then, with a recent sudden spike. Today, I want to explain why this sudden surge has occurred. Many of you might already think that this is not a natural occurrence but rather a deliberate move. Indeed, it's an artificial move. Let me introduce you to an article. A person named Baron holds a significant amount of shares in China's four major banks and has recently increased their holdings, meaning they are buying bank stocks. Moreover, they have announced plans to continue buying more bank stocks over the next 6 months. This is why bank stocks have been rising. By the way, the four major banks include the Industrial and Commercial Bank of China, the Agricultural Bank of China, the Bank of China, and the China Construction Bank. Baron is a significant shareholder in these banks. For instance, in the case of the Bank of China I mentioned earlier, Baron holds a 64% stake. In other words, a substantial portion of China's bank stocks is controlled by the Chinese government. Even when it comes to stock trading, in the case of banks like the Bank of China, less than half of the trading is done by investors, the rest is under government control. Efforts have been made to prevent such a situation, including restricting major shareholders from selling their stocks. Nevertheless, even in a tightly controlled system like China's, maintaining stock prices isn't always guaranteed. The government, in the form of state-owned enterprises, is actively involved in shoring up the stock market. It's essential to recognize that China's domestic stock prices largely reflect the government's actions and not the actual economic conditions. In Japan, there may be a lack of information about China's economy. Some might believe that the concerns about the real estate sector's debt crisis have subsided or that the Chinese Communist Party will resolve the economic challenges. However, if you think that way, you may be in for a surprise because the situation is far more complex. At this stage, when stock prices are falling, It can trigger a negative spiral, with individuals needing to sell stocks due to collateral issues, further pressuring stock prices downward. To avoid this, various measures have been taken. However, even though there's a law in place, those who lend money often have ways of circumventing it, especially when large sums are involved. Chinese banks have faced ethical issues, with bank officials receiving bribes and engaging in questionable lending practices. This behavior has led to numerous non-performing loans, affecting the stability of the financial system. While regulations and punishments exist, their effectiveness in practice is limited. For instance, if someone can secure a loan of 100 million yen by offering a bribe instead of the required collateral, they might not have any intention of repaying it from the beginning. In such scenarios, the borrowers tend to have no intention of repaying the loan, even though the lender has broken the rules. Therefore, in some cases, there's a tendency for the lender to recover as much as they can and then pass on any remaining money to the debtor. While there is a law against illegal lending practices in China, the practical enforcement of these laws can be inconsistent due to the influence of local authorities. In such an environment, there are temptations for bank officials to engage in questionable lending practices. The recent enforcement actions against bank executives in China may indicate a shift towards stricter oversight. However, it's worth noting that while these actions are administrative punishments, there's speculation that criminal liability could be pursued in the future. In conclusion, the management and oversight of lending practices in China's banks have been lax, leading to concerns about non-performing loans. Bank officials who engaged in questionable practices in the past are now facing penalties, with potential criminal liability on the horizon. It's a sign of a changing environment as the Chinese government seeks to address these issues. Furthermore, it's important to understand that China's stock market is heavily influenced by government actions and it doesn't necessarily reflect the actual economic conditions. This makes it challenging for investors to make informed decisions based solely on stock market movements. That concludes our discussion for today. Until next time.